What's up, everybody? This is Jimmy with Trading Decoded. It is February 14th, 2024, and it's 4:07 in the afternoon. The market is closed. First and foremost, happy Valentine's Day. Happy Valentine's Day, especially to the 6 women that watch this channel. I hope you enjoy your day, and I hope your significant others treated you very well. SPY treated a lot of us very well today. As for right now, we have a 4-to-1 ratio in the community, meaning 4 greens for every red. The chart provided us many great trade entries, good justifications for getting out of those trades. And if you played them, you got to make really good money today. All right, we're going to talk about a few of those trades, and we're going to explain everything as to why we got into them, why we got out of them, and yeah, and that's what we're going to go with. So let's go ahead and launch the chart and talk about what we did. As you guys know, we have pre-market lines 1, 2, and 3. Our call line scenario was a breach of 496.63 to the upside, looking for at least 496.94, and very most the pre-market high over here at 497.06. Well, our put scenario was a breach of these support levels to the downside, looking for a gap close, which was at 495.85. That's what we were looking for. However, we also had our normal targets high, targets low, all that stuff. Going into the open, we opened above our call scenario. That negates the trade. So we didn't take a call at open. However, we did notice very quickly that we were struggling to get past that 497.06 first and foremost. We were also showing Qs struggling at this resistance. Okay, we talk about this in real time, guys. I like the wicks on the tops of the Qs. I know our put scenario is down here, but this might be an excellent entry for puts. Knowing that if Qs close above this line, you got to get out of them. But I like what I'm seeing here. I think ADD at the time was also pulling back by the second or third candle. Things very quickly shifted in the favor of taking a potentially aggressive entry to the downside. When you've got Qs at a resistance like this and SPY at a resistance like this, and ADD is going south, it's hard to argue the reason to not attempt to take that trade. Okay, so at that time, which we talked about here at 9:32, we said, hey, if you're looking to get it into an aggressive entry on puts instead of waiting for this breach down here, now would be a good time to do it. It provides us the ability to have a nice stop loss. If you're using SPY as your stop, anything above 497.06, want to get out of the trade. Otherwise, we're looking for the gap fill. Now, many of us got into this trade up here. Some of them got in a little bit sooner. Awesome for them. I chose to get out of my trade at this support level. The reason for that is because all I've known this to be up until the point was support. So if I'm able to get into a trade here and get out here, I've already made money with minimizing my risk of it not moving down. However, our put scenario was a breach of that line looking for 495.85. So you had 2 opportunities to take this trade here. One was more aggressive. One was more, some would still say it's aggressive, but I would say the chart at this time had proven that at least there's some momentum to the downside. We are breaking pre-market support, looking for it to go down to the next support. Okay. I don't know what risk factor you want to call that, but that is the reasoning for that trade. And I want to point out that, well, as soon as we crossed that put line, it went straight down to where we hoped it would go. So that's why you have an arrow here and an exit here. You could have taken this arrow here and exited here, would have added a lot more value to the trade. Or you could have got in at the breach of this line and got out here. Either way, I could tell you that if you got in anywhere on this candle near the resistance up here and got out near here, you should have made somewhere between 27 and 30%. Now, if you held that trade from here down to here, you probably made 45 to 50%. Beautiful move to the downside. But the pink line is the stink line. We don't mess with the pink line. I beg people every single day to please don't hold your trades through the pink line. Okay. Now there are situations, today was one of them, that when we come down to that line, it just blows through it before you even get a chance to get out. Those are blessings. And we got one of those today. All right. However, at 9:40 in the morning, Qs were getting awfully close to a level of support. So as people were still holding on to that trade, not only do they know to be aware of the pink line, I also switched to the Qs chart and I start telling them, guys, if you're in your puts, just want you to be aware that Qs are coming very close to their support line down here. I am relying on the Qs a lot for my entries and my exits on SPY. There are several trades today that we got out of because of where the Qs were on their chart. And we're going to go over some of those today, but you start to watch, guys, and you will see a nasty correlation between the Qs stopping at their own support resistance lines, and you will see SPY stop dead in its tracks wherever it is, regardless of its support and resistance because of the Qs. Just watch. Okay, don't listen to me. Just look at the two charts side by side during the day, plot your levels on your Qs chart and watch. All right. So a lot of our exits are based on the Qs reaching resistance or support. Now, everybody who was in a trade here, a lot of people were one and done at this point. Okay, here we are 10 minutes into the morning. Most people made enough money, made a one and done trade. They're done for the day. Dude, this is the ideal work day, guys. If this is not what you're striving for, what is it? Because if you're trying to get out of a 9-to-5 job just to get into another one, you know, the difference between the two jobs is you get paid more for staying longer at your 9-to-5 job. You are going to make less by staying longer in this 9-to-5 job. Okay? It's a true story. Keep trading throughout the day and tell me that it's not accurate information. But I digress. We find support here on yesterday's high of day. Okay? The low of day was all the way down there, which you didn't make it to. But anyway, we bounce off of it. What are we looking for? Calls? No, not even a little bit. But we are looking to get up to and hopefully through 497.06, that pre-market resistance. But we put in a lower high instead. Okay, does this mean puts here? No, it doesn't. We were letting the market try and get out of this wedge, number one, and waiting for a reason to take the next trade. If we would have broken this downtrend line, okay, maybe. If there's enough room between the line breaking and your next support, by all means, take the trade. Okay, now, as we moved up into this wedge right here, usually these wedges do break up. But why should we not be aggressively getting into that trade? It's at this time where people start asking me, Jimmy, where would you buy calls? And I said, I'll tell you where I'll buy calls. And there's 3 criteria for me to be comfortable buying these calls. Number one, I want to see SPY over 497.06. Number 2, I want to see Qs above 431.75. And number 3, I want to see ADD printing green. All 3 of those things happened right here at 10:18 in the morning. We crossed the line on the Qs, on SPY. We crossed the line on Qs, and ADD was green at this moment. Not only that, we had Qs putting in higher lows, so if you expect this trend to continue with a higher high, naturally we're going to get through this line and continue up. Guys, that was what the criteria for this particular trade was. We got it. We entered it. You take it line to line. If you're playing line to line, I, myself, got out of this trade here, but I tried to help other people stay in their trade. Okay? How did I do that? I kept telling them, guys, we broke resistance on Qs. We got a little bit more room to go before we get close to our next resistance. ADD is still pushing up. Let's ride it. Explaining along the ways, especially once we got above this 497.52 line, make that your new stop loss. If you got in here, you chose to stay into the trade here, we turned resistance into support, there's your new stop loss. There's no way you can lose money as long as you make sure that you close out before it gets below what you paid to get in. That is the only way you can make yourself completely free of the stress of letting a green trade go red. Now, I wouldn't say put it at break even. I would say put your stop loss somewhere in profit so that if it does pull back or you do have a weak moment, that you can stop yourself out and still have made some kind of money. Okay? Me, as a line-to-line trader, I don't like to hold my trades for too long, but even this play right here was a 25% win. And for those who held longer, the only reason we're up here is we started to realize that this move was slowing down. We check our Qs chart. Qs are slowing down, but they're getting awfully close to their next resistance. Guys, at this point, you might want to consider taking profits. At the very least, if Qs get below this support line here at 432.34, stop out at that point. So that happened at 10:33. SPY at this point was struggling to move higher. Okay. 10:33 could have been your candle to get out if you didn't get out up here. Okay. Now, back to the downside. Again, slightly aggressive trade. It is a counter trend trade simply because we were trending up at that moment. However, we broke the upward trend. We closed below support, coming off of a lower high. What do we expect to happen? Well, we expect the move to continue down to the next support. It made it through that, and it even made it down to the next support, which is right here. Okay, 469.79. But why, Jimmy, did you not put a circle here? Why is it here? No, I don't draw these circles after the fact, guys. You want to know why? I'm going to show you exactly what we talked about in the beginning of this video. 10:45. What was happening at 10:45 on the Qs? That's right. Right on a support that had held pretty damn good leading up to that point. So I wasn't even in this particular trade. As people were in this trade, I was telling them, guys, Q's got some room to go before they hit their support. I'm looking at the Q's chart, talking to them while they're in SPY trades, saying, guys, Q's are coming close to their support. I consider taking my profits when we get there, and we're on it. That, again, not looking at the SPY chart, was right here when I said we're on it. Now, could you have gotten out here based on this support? Yes. But I was trying to use Qs as the reason to stay in the trade, as I often do. Okay? I don't mess with strong levels of Qs to the upside or the downside. I respect these levels. Guys, support and resistance is my life. And that means that I have to respect it, not just on the SPYs, but certainly on the Qs, because we also are aware that the Qs are what really are dictating what the market is doing for the most part. Don't ever forget that. Until the Magnificent Seven are no longer magnificent, get used to the fact that SPY is going to be submissive to the Qs. Okay, almost always. Not always. Sometimes the small caps are moving enough to make Qs not the winner or the driver of that particular move. But more often than not, Qs are the winners. Okay, and if they're both moving in the same direction at the same time, as I always say, do not trade against that. If Qs and ADD are moving in the same direction, just assume SPY is going to go with it, okay? Very, very, very rare that that's not the case. With that said, that's why that exit is there. Now, as we pull back, continuing a downtrend, we get through lines, and every time, by the way, that we were in a downtrend and we broke or closed below resistance, we made it to the next resistance or support. I'm sorry. Every time we closed below each support in a downtrend, managed to make it to the next support down. Okay? In, out, in, out, in, out. Now, I also want to bring something else to your attention. After every time that we have come through the put line from being above it today, it paid. We broke through it here, straight down to yesterday's close or yesterday's high of day. We come down from here, breach it again, we get down to yesterday's high of day. Now, this is a trade that I was in along with several other people, and we got lucky, or at least I do, because I don't hold my trades through the pink line. But as we were closing this candle and starting to print this one, it literally puked. Too fast for EB. I marketed out of this because I reacted as soon as we breached that line, but it happened so fast that you had no choice but to make a whole bunch of extra money. Did I hold that trade? No. That was my last trade of the day. That was a 50% winner. 50% winner. Okay. Today, for me personally, was what I would consider to be a home run day in relation to what my normal winning days are. This was a very, very good day for me. Very good day for a lot of people today. Okay. And if you were just patient, waited for the right setups, were paying attention to the right things, you could have made very good money today. Okay. Now, I want you to take note. We came through it and we went right down to the futures line. Okay. Slightly below it. We pull back. Okay. Now what's going on here? This is my favorite and only time that I will play flag plays. Now, I didn't take any more trades after this one here. So none of these trades here or anything I'm involved with. But guys, and I wasn't even here for this one. It's here because I want to show you as an example of what I teach when it comes to flags. Okay. I don't play them very often, and I don't ever play them unless we're in a flag that is terminating at a level of resistance. If this was happening right here and we breached this trend line in the middle of a channel, I don't play that. I don't play that. I want to know that not only is it setting up to be a flag and that we are still downtrending, which means we want to put a lower high, I'm also got the safety of what was a line of support turned resistance. Okay? That is what I'm looking for. I want probabilities of higher safety for taking this trade than less, which puts me at a higher risk of losing. That's it. I hope that makes sense. I only play flags that terminate, meaning we pull back to resistance. And ideally, you'd like to see Qs at a level of resistance around the same time. I don't know if they were at this time. They were up against resistance right here during a downtrend. That would even be another reason to take this trade. Okay. And if you're aggressive, you're playing the line of resistance. If you're conservative, you're waiting for the breach off of that line of resistance, meaning we breach this green line and we're taking it down to the next support. That's it. Okay. So that's what that trade setup was. We bounce off that support, we move through, and not only through there, we get up and make it to the next line of resistance. Okay. Then we start chopping around. At this point, I'm being asked, Jimmy, would you buy calls here? Would you buy calls here? I said, you better wait for everything to be looking in the upward direction before you take that position. So no, I wouldn't take calls here, and I wasn't taking puts here. And as we're too close to the pink line, consolidation, all this fun stuff. Now, where's our put line at? Up here. Okay. So we're stuck at our put line, reject back down, come right back down to and through our futures line. Great. I'm sure Qs was hitting all kinds of levels along the way. Let's see what the Qs were doing at 12:06. Now at this time, I'm out to lunch. 12:06. So Qs had just made a new low a day. I think that was their low a day, just like it was SPY's. Yes. But no way to tell that this was going to stop here. So I wasn't here to talk about it at this point. I took my lunch at 12:05, I think. And either way, I came back around 107, somewhere up in here. Okay, so obviously when we get back, we got to reassess what's going on. We had gotten above our put line, but I want you guys to notice that when we came back through it again, it made it right down to the futures line. Okay, when we got above it again and broke it again, right back down to the futures line. All right, pretty wild how well that put scenario worked today. Now, the next trade that we talked about was here. Okay. What is good about this trade setup besides everything? Putting in lower highs, lower lows, so we're trending down again. We had just pulled back from hitting a support level up to resistance. We had trend line, we had resistance, we have downtrend, and we have Qs at 2 o'clock. Where are we at here? Pulled back to their resistance as well. All systems goes, guys. All systems go. Nothing wrong with that trade. Everything we look for was in the right direction at the right moment. Puts. Where are we looking to go? Well, the same place we've gone every time we've made it through this line when we were coming down to it. Let's aim for the futures line. There it is. Oh, Jimmy, what about the pink line? Yes, you're absolutely right. We have breached through the pink line several times since the first time. And, so it became less of a factor. Price has been accepted below that level. We can be a little bit less fearful of the pink line at that point, okay? We find support down here once again, as we had done here and as we had done over here and here and here and here and here, okay? Don't ignore support and resistance. And it holds. Now, we did have some people holding on to their puts here, and I kept telling them, guys, if Qs can't break through this level, SPY's not going to go lower. So please just keep an eye on the Qs. If it doesn't hold, and the reasoning for getting out there was because of what it did the last time we touched this line on the Qs. Look it. We came down to it, shot us up to 431.75. We came down to it, shot us up to 431.75 and higher. Guys, accept what the chart told you the last time. Yes, it's going to stop you out of some trades a little too soon, but it will save you way more often than it hurts you. Besides, if you got into this trade at the right time and you got out here, I don't even know what that paid, but you should be happy with whatever it was, happy enough to not want to take the risk of this doing what it did the last time it touched it. Everybody gets caught up in the idea of only contemplating and justifying everything they do based on the scenario that will benefit them. Start to look at it the opposite way. It will make your trading day easier. You know what it makes it easier for you to do? Take profits by respecting the chart. Walking away when you've had a nice green day. Knowing when to get out of a trade with some confidence. Adding to your account. Okay? All of these things, guys, when you start to think about the opposite effect of what you're about to do, is what I'm saying. If you think about, hey, I've had 3 good trades today. I know that taking more trades per day opens me up to a potential of a higher risk each time of having a bad trade or a wrong trade. That's fine. Okay? Don't be afraid to take a trade that doesn't work out. What you need to be afraid of is where your weaknesses are as a trader. I know for me that if I am up a decent amount of money or any money on the day and I decide to take an additional trade, okay, and that trade, I get in for all the right reasons. It doesn't go my way. I was up $1,000. Let's say I'm now only up $500. I'm still up. How many of you out there are slightly irritated or maybe very irritated, even pissed off that you gave up $500 of the 1,000 that you had? You may still be happy as a pig in shit. That's fine. You're still up $500, but you're not forgetting that you were once up twice that. So what does that spawn a lot of us to do? I know what it does to me. And this is why I stop trading when I've met my goal or feel like I've pushed my luck enough. Makes me want to take another trade for the purposes of getting back to the original 1,000 that I was up. But here's the bigger problem. What if that next trade doesn't accomplish that? And let's just say it is a winning trade, but I only get back from 500 to 700. Oh, I'm still $300 short of what I once was. Let me take another one. That next trade might put you in the zero or red. Now what? Can you now walk away? Probably not. You will trade until you run out of buying power or you blow up your account. Guys, every rule in trading assumes that we trade without emotion, and that indeed is the right way to trade. However, we're human beings, and let's be honest, most people will never be able to trade without emotion. Some people can, most people will not. Most people cannot. Okay? I trade with emotion. I get excited when my trades go in my favor, and I get really quiet when they don't. Okay. And when they don't go in my favor, I start to justify all of the stupid things that I do while in that trade after I've broken the rules. If you know yourself to do the same thing, it would behoove you to walk away after you've had a couple of good green trades on the day. Guys, I want you to take as many trades as you can, and if you take them for all the right reasons, you should be rewarded. But I'm telling you, as a guy who has been in this business, helping other people do this, okay? The win ratio drops the longer the day goes on. Okay? Now, if you can't afford that to be the case, then it's better to walk away. I've had people today who are taking what we call base hits, line-to-line trades. They're not big money trades. But 5 days, this gentleman, after 5 trading days or 7, his account was up 20%. 20%. Taking base hits. If you're not doing that the current way you're trading, wouldn't that be an improvement? No. He looks at his wins and say, man, I only made $22 today. I only made $17 today. I only made $50 today. But at the end of that 5 days, he said, man, my account's up 20%. So I asked him, when was the last time your account was up 20% in 5 days? He's like, I don't think it's ever been up 20% in 5 days. In fact, his answer was when I started listening to you. Okay. Now, at some point of him doing that over and over and over again, he is not only growing his account, which will allow him to comfortably scale up, he's growing his confidence. He's proving to himself that what he does works. And that is when you get to pick how much money per day you want to make. Because you will keep doing the same exact thing that has been working for you, and you change your position size. Same trade, larger position. Which means the same trade, instead of paying $20, now pays $40 or $60 or $100. You've changed nothing else about the process. Nothing. You've just added to your position size, so now those base hits feel like doubles or triples or home runs. You know what else that does? It allows you to scratch that itch of saying, oh, I don't make enough money per day, which is keeping you from stopping trading, to all of a sudden, man, I could take one decent trade for 10%, 15%, 20%, and I made all the money I need. I'm out. I'm out. Guys, you have to earn your way to do that. You've got to earn the right to trade that way. It doesn't just happen overnight, and it doesn't come easy. But that's the way it works. Okay? You've got to take baby steps to convince yourself that you can comfortably walk. You can go from walking to jogging, jogging to running, running to sprinting. You can't just start off from crawling and sprinting. You'll lose every race. Okay? With that said, we bounced right off that support on Qs, just like we did on SPY, and we moved up and up and up. At this point, it gets too late in the day where, I don't trade this late in the day, but I will share this last story with you because this was kind of important. One of our members was asking, Jimmy, we're at a pretty good resistance level. Would you buy puts here? Now, I didn't say calls. I was explaining why I wouldn't play puts here. Okay. This is before any of this happened. This is all up in here. He goes, we're at resistance. We got a downtrend line. I said, well, just like earlier in the day, you want to wait for things to prove to you that it's worth taking that risk. We are still in a downtrend. Fine. We are stuck between two lines of support and resistance that are relatively close. We're building support right here. Okay. But still, you need to be careful because we are coming off a higher low. Okay. And we had closed above the trend line. So that means this downtrend is officially broken. We are still below resistance. Qs at this time, I think we're breaking through resistance as well. And ADD was moving up. Let's see at 218. Okay, so Qs were stuck at resistance as well. And ADD was moving up. That's what it was. ADD was going up even though Qs were coming down. I said, I don't like the fact that ADD is moving up. and Qs are moving down, I'd be patient, I'd wait, but I certainly wouldn't buy puts. Did not say to buy calls, although it worked out well. But my point was, I'm not only, and I told this to our folks, I'm not looking to help you guys only learn how to get into trades worth taking. I'm equally and desperately trying to teach you how to skip trades that are not worth taking. I think it's as important, or maybe even more important, to know which trades to skip. Because if I can explain to you enough times why you should probably hold off on taking that trade, and you see everything that I was trying to prevent you from doing actually happen, you will start to say, well, man, I know Jimmy can't see the future, but he's on to something. It seems like every time he suggests something, it works out. Guys, don't fool yourselves. It's not every time. But I've gotten pretty good at stacking probabilities in my favor. Those probabilities have also caused me losing trades. They've also caused me to not take trades that ended up being monster winners. I'm not saying that. But you know what trade you cannot lose money on? The one you never take. So if you can protect yourself in understanding why it might be a little too risky to take a trade here, you lost no money. Okay? And you certainly you wouldn't have made any money on puts here. So you can look at it how you will. But every day we spend in the trade room, everything that we see, everything we think is going to take place based on reasoning for it. Okay? Logical explanations. It's not about, oh, I feel like it's going to drop here. No. Yes. Okay. If it's going to drop here, I'm interested in puts. Here's why. If we're moving down and we're getting to a level of support, and even though we're coming up to 1 on SPY, I immediately go over here, see if Qs are on, through, or near a line of support resistance. If we have just broken through resistance on Qs, I'm going to hold on to that trade, and I'm going to help other people try and do the same. Even though SPY is on a level, if Qs have just broken one and have a ways to go to get down to the next one, hold on. Just move your stop down. All right. After this, we kind of chopped our way up, kind of squeezed into the end of the day. Now, somewhere around here, we were playing the guessing game of where we think we're going to close. And I said, well, I'm going to use one of my lines, but I'll guess 499.21. I didn't believe it was going to get there, and it almost did, but it didn't close anywhere near there. It closed all the way down here at 498.63. So that was the close of the day. Nice run up. Also, while we're trending up, buying pullbacks is always good. Let's see what Qs we're doing at 334. Again, I don't trade that late in the day, guys. 334. Okay, so Qs were nowhere near a support resistance line. So I'd have been a lot more hesitant to buy this because Qs were floating around in the middle of nowhere. There wasn't even an intraday support level that we could have used. So I wouldn't have taken that trade myself. But you should be looking for reasons to take calls in an uptrend, justifying them with levels of support to buy them off of if you can. All right, with that, we're going to wrap it up. Hope you all found some useful information in this video. I know it was a little bit longer. I apologize. We had a great day today. I'm trying to share all of the things that I remembered trying to help people with today, and that's why this video is what it is. With that said, enjoy the rest of your day. Have a great Valentine's Day. Check out our if you'd like to join our Discord community, there's a link down below. Sorry, we're all over the place. You know what? First, like, share, and subscribe. Thanks. If you'd like to join our Discord community, there's a link down below. First 7 days are completely free. Jump in, see what it's about. You don't like it, sayonara. Thanks for stopping by. Hope you learned something. If you do like it, well, become a paying member. It's fun. Also, check out our website, www.trading-decoded.com. And that's pretty much it. Love you guys. Thank you for tuning in. Thank you for supporting me in our trade rooms. Thank you for joining me in the trading day. Love you guys. See ya.